This is such a joy to be here and to be at the first Buy Then Build Summit. I think it was a long time in coming, and I'm happy to see everybody in the room. I'm going to do a brief intro of our panelists, and then we'll have them introduce themselves. So Jackie, founder of Crown Atlantic Business Brokers and an 8X SMB investor. Jackie has sold 400 plus companies across Florida, specializing in high quality cash flowing businesses, and is a nationally recognized speaker. So happy to have you here. Then Lane, I can't believe you sat in order. This is wonderful. Lane, founder and managing director of Optima MA. Lane is a sell-side advisor for 10 to 100 million middle market owners and an SMU Cox instructor known for disciplined valuation. And let me tell you, when we talk, he's very disciplined. Competitive processes and guiding founders through marathon level diligence to the finish line. Then we have Gregory, president and designated broker at IBA. Gregory has spent 30 plus years facilitating hundreds upon hundreds upon hundreds of transactions across the Pacific Northwest. So we're getting the East and the West here, bringing deep expertise in manufacturing, distribution, and service businesses from 500K to 30 million. So why don't we do this? Let's start with Greg, maybe add on a little bit from what I've said as an intro, maybe about a minute or so.
Certainly. So thank you, Karen, and thank you to Chelsea and Walker for this opportunity. So IBA is the oldest business brokerage firm in the Pacific Northwest. One piece I'll touch on that's different about us also is every one of my brokers holds real estate licenses, and we do have the ability under one umbrella to sell both asset classes, and it often makes sense to own your dirt. And so we have that ability as well. In Seattle, we were recently ranked by the Puget Sound Business Journal as the 18th largest commercial real estate firm in the marketplace, which is really interesting because the only real estate we represent is real estate attached to businesses.
Lane?
Yeah, thanks so much. I'll begin as well by thanking Chelsea and Walker for including me in the event. It's been great to get to know this community a little bit. I'm so impressed with the work of the Acquisition Lab. And I wish all of the searchers that reached out to me came from this group as well prepared as they are. Don't have much to add to the resume. As I said yesterday, I'm the rookie on this panel. I've been working deals for about 6 years now. These guys have done 1,000 deals between them. I work mostly lower middle market deals, but I do get below 10 million on some, and that's where I sort of intersect with this universe.
And Jackie?
Well, I will follow up with thank you to Walker and Chelsea as well. It's really a pleasure to be here with this community, and I think my whole goal is to just give you guys as much information as I can. So obviously, you know, I'm a broker. We covered that yesterday, and I do really custom work. Like when I'm on a deal, I am in the deal. Like I am hands-on negotiating with the attorneys, the landlords, the insurance people. And if you haven't talked to Josh and Andy from Newco Risk, like, I mean, I'm with them, like, and in it. So I don't pass it off to anybody. And even when I work deals in Dealonomy, it's a team. We are all involved. That can be really an asset when you're buying a company. And a lot of brokerages just kind of like do a phone intro and give you like a very thin sim with maybe some relevant and maybe some accurate information. And that's not really the best thing, but you can still win at those deals. So my goal today is to teach you how to win at every possible thing. And don't let Lane fool you. He's amazing, amazing. And I don't say that lightly because I come across a lot of brokers. But and so is Gregory. But Lane was like, well, I haven't been doing this a long time. Anyway, some of the things I want to cover today, and I want you to think about are, you know, working capital, deal negotiation. It's why I asked the question of Chris about the terrible brokers, which was a little bit funny. And that's real. Like we really need to talk about how to structure a deal simply, still creative, so that it works for you. And then I'll cover some other things. Ryan and I had a good chat on the treadmill this morning, so we'll talk about that.
Wonderful. Well, we have a few questions to start with, and we're going to be covering how brokers set pricing, what happens when there's no asking price, and then competing with PE. So we've got a lot of ground to cover, and we have such great experts here. So let's start with, tell me, how do you set a price when business comes to you for sale?
Okay, this is such a great question. Setting a price. We look at a number of factors that are hard factors, right? That are factually based. And then there's a lot of factors that are soft factors that you might not consider, right? Like, is this business in a location where people want to be? I might have a business in Arkansas. If that business were in Miami, I get, probably another turn on multiple, right? Or if that business is in another area. So there's a lot of other factors, like, do they have family in the business that actually work there? To me, that's a negative. Do they have family that doesn't work there and they pay them? That's a positive. Do they have a spread of work, diversified customer base, diversified vendor base? Sometimes you're held accountable to one vendor, and if that goes out, like 1 year, one of my clients, his only vendor was McKesson Medical Products. And during COVID, they had a massive problem shipping stuff in from China, and he had a massive dip, right? That I still have to deal with in 2025, and this dip happened between 2020 and 2022, right? But people still look back. So there's a number of factors that we look at. You can always look at the facts. Ultimately, you still have to figure out, what is it worth to you?
So I'm going to follow up, because a lot of what you said is sort of based on your experience understanding the marketplace. What resources do you use for data? So searchers out there have Search Funder. They can get visibility into deals for free using BVR Deal Stats. Are you using that? What are you using?
We use a series of different things, from BVR to Pure Stats. And again, I know, statistics are only as good as the information you put in, right? There was some professor that was quoted saying, statistics are just lies with numbers. So there's a little bit of that. You have to know, what was that EBIT? Was that EBIT correct? Was it really, did it include a CapEx? Did it include, later in the deal, that was the EBIT when they put the business on the market, and then the business sold 8 months later when they had grown 20%? Did they fix it? Right? You don't really know. So it's just a little bit of a guide, but I really run my own numbers about how somebody can repay that business, right? So it goes back to what's that business worth to you? The other measure I look at is, if you have $5 million, can you recreate it, right? If it's priced at $5 million, can you recreate that for $5 million in that speed of time, in maybe 6 months, with working capital, and have that money coming in? Usually the answer is no.
Okay, so I feel like Lane is chomping at the bit to start talking. So do you want to add on?
Well, I think it was Will Rogers, and maybe one other person in the room old enough to remember Will Rogers, the American humorist, and he said they're lies, they're damn lies, and then they're statistics. I agree. I think there's a real serious problem with the data on private market transactions. I came from the wealth management business, and we had the same problem with hedge funds. The winners announce and publish their results, the losers fall out of the database. I think Walker yesterday in the first part of the session showed a chart of multiples, for businesses, and said these are wrong. Biz Buy Sell sent me something the other day that said the average deal on the platform traded at a 2.8 multiple last year. I don't see deals. I know their deals are much smaller on average than the ones I see, but we do a front-end valuation. We hire professionals to do that. The good news for you is that we really want to understand where we think our client's business is going to transact. We're not serving them. We're not serving you if we don't really understand. When I got into this business, because I did some consulting work for a business brokerage firm and then for the largest national M&A shop. And what I discovered was, and this may also fall into the lies, damn lies, and statistics, but the number that gets batted around in our industry is only about 20% of deals that go to market close. 20%. That's an 80% failure rate, right? Why is that? What I saw in the seat I sat in for a much shorter period of time was just expectations for pricing by the seller that were not dealt with directly by the intermediary, right? They want to take businesses to market. It's a success fee industry. You want to load up the wagon with as many deals, at least for the firms that I had my initial tour with, and you don't want to have that hard conversation with the seller to say, you don't have a $5 million business. You have a $2.5 million business. You have a $3 million business. Or really what we tell them is a range. We say, look, here's, we get data. Again, I don't really trust the data, but here's where businesses, from what we can see, are trading. We think you're going to trade in that range. If you're willing to go to market and accept something within that range, we'll take you, we'll advocate, we'll try to get a better price, but this is where we think you're going to transact. If you're not interested in doing that, let's not go to the trouble. You go back and work on the business and improve it to the point that your expectation will be met by the market. We had a client earlier this year, February this year. We did a valuation. We presented it to the seller. It was a group of shareholders, and they said we wouldn't sell for less than 3 times. That literally, we wouldn't sell for less than 3 times this valuation. Well, that's great, right? Because I'm not going to spend 6 months out chasing a deal that's never going to close. And for them, I referred them to a fractional CFO, COO, and said, look, the market's not going to come back to you. The market's not going to decide that you're a 12 multiple, right? So you got to improve the business in order to align with the market. And that's the process they're in.
Wonderful. Gregory?
Thank you. So I went to the University of Texas and studied investment finance. And I've always looked at this marketplace from an investment perspective. On one side of the equation, buying a business is an investment decision, and you talk about return on investment, et cetera. On the other side, it's buying art. It's a very unique property, often one of a kind, and valuing art is very problematic. When you look at an investment, you need to look at it on a spectrum. You start on one side with CDs and bonds. You move generally to real estate. Then you move to mutual funds. Then you move to large cap stocks, then small cap stocks. And then you get out where we live, which is privately held company sales. And when you look at it, and I touched on this a little bit yesterday, you're looking at both historical return on investment, the annuity, and on the other side, you are looking at appreciation potential, just like an IPO. If you're buying an IPO, you're not buying it based on where it is today in valuation. You're buying it in the future. And I live in tech land. My Microsoft, Amazon, Google are all within a couple miles of my office. And so we have worked in that space. So you need to take all of those factors into consideration and valuation. And 2 closing comments is A, true market value is always defined as what a willing buyer and seller will come together. It's not a negative to make an offer because you don't know where the other parties are at. The winner will be the one who has the most attractive one for the seller. And then inside tip, there are 2 business models primarily in business brokerage. Our business model is 100% paid on performance. We don't accept a penny until the deal is done, whether it sells for 6, 7, or 8 figures, doesn't matter to us. We only want to be paid by a happy customer. So I believe as a buyer, it's favorable to work with firms with that model because they're actually in the boat with the buyer because their business model does not work if sales are not completed. The other model, which you need to always be cautious about, is the ones who charge retainers and administrative fees, consulting fees, up front. And just like Lane touched on, most processes start with a valuation of the company. Well, if you're paying $50,000, which I have seen, for the valuation to start the process, that company is going to give an answer that the entrepreneur who is selling wants to hear, and they will be happy at time of listing, but their level of happiness will decline as the market speaks. And I have a real problem in the marketplace because those firms are leaving the heavy lifting to you, the buyers, to negotiate the sale because they're not willing to have that hard conversation.
Thank you. I have one follow-up for you, Gregory, because you mentioned that setting the price is part art. So if you could divide it out between emotion, logic, and art on setting the price range, what percentage of each would it be?
Well, and I lean into what Jackie said. It's market knowledge is critical in valuing businesses. Someone who is selling businesses knows the marketplace, knows that market value. And I'll give a real basic example from my world. Oregon and Washington are divided by the Columbia River. The two states have a significant difference in tax policies. Washington has no state income tax. Oregon resembles California in terms of state income tax structure. So if you have the identical company doing 10 million in revenue, we'll say 1 million in EBITDA, which to you as an entrepreneur is going to bring more money home, and which one should you pay more for as an investment when you do the math all the way to the bottom line to what you net for the investment, which should be a consideration in every acquisition.
Anything to add, Lane?
No, I do want to give a shout out to Greg for bringing up the capital asset pricing model. Well done in terms of risk-adjusted returns. I explain that to my sellers that, you know, if somebody's paying you a 4 multiple for your business, they're essentially saying on an unlevered basis, it's a 25% internal rate of return if they can maintain your cash flow. If I can invest in public market stocks through a mutual fund and make, I don't know what the number is, 12% a year, how much more additional return do I require to buy your privately owned business that's illiquid, that has customer concentration, that's in a single industry? And the answer is, for me, a lot more than 25%. That's why, particularly when I'm dealing with a private equity firm in a larger business and they think, my goodness, you know, my business ought to be worth a lot more. It's like, no, they've got to make a return. They got to buy your business, run it, grow it, make a return, pay their investors. And so, well done.
Jackie, anything to add to that? No. Okay. So our next question is related to the no asking price situation. So searchers, particularly early on in their search, they get a little scared about framing their offer as either too low, maybe insulting the owner of the business, or too high. How do you think searchers should treat that no asking price situation?
Okay, so first, an insult is like your mom's a big fat pig. Okay, that's like an insult. Okay, so making an offer is like, I am interested in this business, right? So how do you make that work, right? When you know that the seller is here and you're here, how do you bridge that gap? This is what you do. First, you're making it work for you, like we talked about yesterday. What are your numbers for you to take that risk? That's number one. Number two, when you make the offer, you send a personalized letter about you, about what your goals are, about what you plan to do, not like dumping on them with you should be doing this. Like, I plan on growing your team by doing this. I plan on offering healthcare because I have that and it's meaningful to me, right? Like legit, real, tangible things that you're going to be doing that make you stand out over private equity or any other buyer. I live in St. Louis and I only want to buy a company in St. Louis because I live here and I'm not going anywhere. Or, I was talking to some of the California buyers. Michael and I were talking, like, I live here. Michael's in Philly, but like, I live here and I only want to be here, right? Be very specific. And that's how you get across. Make the offer work for you, right? Just like, when you're dating, everybody's like, oh, well, I need to be likable to them. My question is, do you like them, right? First, do you like them? Before even worrying about they like you, do you like them? Then, if you do, that's when you make an offer. But no offer is insulting, in my opinion. It's, I'm interested in your business. Here's what I'm willing to offer. Here are my numbers. Here's about me. And let's do this deal.
You want to add, Lane?
Yeah, not a lot to add. I agree. I referenced yesterday a deal we closed earlier this year, a commercial landscaping firm in Texas. And our client accepted the third highest offer. So, I would just say that informs you. And in this particular deal, he had a $4 million higher offer. It was a meaningful transaction, but it was still $4 million more cash at closing. But there wasn't a cultural fit, and there was another group that was in third place that had a better story to tell, and he felt better connected to them. So, I agree. There's no real insulting offer, and I will tell folks, look, you're not competitive with where I think this is going to transact, but I know where you stand now, and if we don't get a deal where I hope it's going to transact, I'll circle back to you.
So, Elaine, do you think it's better for a searcher to give kind of a range of what they're willing to do, or should they give you a single price?
Well, the way I like to run my process is, and it's herding kittens, right? I'm trying to get everybody in the same place at the same time, and it never works that way. But I ask them to put an indication of interest. I really don't want an LOI early in the process. I just want to know, where are you? What are you thinking? Give me a range. And how are you going to define the purchase price? Is it a multiple of EBITDA? Is it a multiple of EBITDA trailing 12 months at closing? Are you going to ask for a seller note? Just give me a general understanding of how you plan to transact and the range in which you'll transact. And if they're anywhere within a reasonable range, I'll take them to the next level.
So, what are indicators to you that a searcher is a serious searcher and maybe not a looky-loo? I'm not sure if everybody knows that term, but that's the kind of person who just sort of looks but never buys.
Yeah, I think that if they present well, which to me means, one, I have some level of transparency to their ability to get capital and close a deal. So my primary concern is, are they legitimate? Do I think they don't necessarily have to have the money? If there's not a clear line of sight and I've got another buyer who has a lesser offer who has committed capital, I got to say that it's going to be hard for me to pay attention to the searcher. But they have a thesis, they understand what they're looking for, they have relevant experience, they have some definition of how they're going to get the capital. All those things kind of add up. And they tend to separate themselves pretty quickly.
And Gregory, would you like to add on?
I would. I'm a straight shooter, and I will tell you, I do not believe in the auction process. All of you as buyers are going to have an expectation to value a business and come up with an offer. The broker is the quote-unquote expert, and if they cannot come up with an asking price for a business, I personally believe they are cowards. They are not taking a position in the public domain on valuation. And we know in the process we're going to have to sell that company to the buyer, who is actually the easiest one because they have emotion, to their CPA, CFO, to their attorney, who's not going to look so much at the numbers but the liabilities created, and to the bank or investors. And Heather, who is speaking this morning, and I encourage you to attend her session, Heather and I can look at evaluation. We can look at the capital injection of a typical buyer, and we can calculate out and say, to get this loan done, we need a 1.25 debt service coverage ratio. The broker should know that in game that's going to be needed to finance the deal, because without the money at the end of the day, the deal's not happening. So I am a strong believer that the best brokers in this nation can price all businesses they represent and justify that value to all those vested parties.
Would you like to do a counterpoint, Lane?
I'm dying for Lane to discuss. Like, I'm dying to hear this. Like, let's do it. Game on.
We disagree. I'll just say that I feel like my duty to my client is to bring them the best possible deal, the best price on the best terms, and I think an auction process does that.
So does that, I suspect that doesn't mean you don't have a number in mind and you haven't socialized that number with the seller, right? They're not going in blind.
Yeah, I mentioned yesterday, we brought a deal to market recently. We didn't put a price on it. We had 6 offers, and 2 of them were lowball offers, and the 4 were grouped within $400,000 on a multi-million-dollar transaction. I think the buyers have a really good understanding of where deals are going to transact. It goes back to Jackie's point, which is run the math, figure out what you can afford to pay. So I feel like putting a price on it, puts a cap on that auction process. Are you going to get the best possible deal for your client if you put a price on it versus not putting a price on it? Are the buyers at a disadvantage if there's not a price on it? Should that change the formula and the way they approach their valuation of the business?
So I have a follow-up question for you. Like in real estate, sometimes they'll set a price a little low to get a bidding war. Do you ever see that in buying or selling businesses?
Can I take that question?
Yes.
Because, and this is a great discussion and it's wonderful for you to hear. So what did I start my previous comment with? The market value of a business is what a willing buyer and seller agree. So we recently sold a online education platform very similar to Khan Academy that provided education for school districts beyond what was offered in the classroom. We priced the entity, brought it to market. My broker had a plethora of interested parties, narrowed that down to 11 offers. We ended up closing 15% above asking price. The asking price is a reference point. It is not the end of the story.
I'm dying to comment.
Go for it.
Okay. This is amazing discussion, by the way. And I have a ton of respect for both of these gentlemen. Some of my deals, I have a price. Those are the SBA size deals, right? SBA has certain caps. You can't really go over 1.5 DSCR. Sometimes you can do something lower like 1.25. I don't recommend it because you're too over leveraged and it's hard to pay back debt service, right? However, I have a company that's pending, and I gave the seller, kind of my opinion of value, right? I think it'll sell in this range. I think the price will definitely be able to get 6x. This is 1.5 EBIT, right? This is a deal, this is the Walker Dybel of deals. Everybody wants to be Walker Dybel comes into a room and he's mobbed like Cinderella, right? So this is like that deal. And I didn't get 6x. I'm at 8.6. Right? Which, I'm a broker. I can't do that kind of math, what percentage that is over asking. But it's a lot. And it's meaningful. And my seller, he's still nervous. He's still freaked out. He's like, my tax bill is going to be like $3.1 million. And I had to talk him down from the ledge. This is that deal. And that's because of the auction process. I have another deal. They do about 55 million. Right, in sales. And so I gave a range, this is where I think we'll bet. It's 8.5 EBIT, right? And that range works. But in the SBA size deals, in my opinion, it doesn't work. There's kind of more specific limits and more specific structures that you can do. You can't be as creative. There was a guy that Walker and I were sitting with at lunch yesterday that was talking about buying property management businesses. Bless you. And he buys them, and they're more valuable to him when he folds them into his platform. So he will pay more than other people abnormally because all of the value added that he can bring, and it makes it profitable immediately. So not every deal is viewed the same, and it's not like real estate where it's a box and you only have this many people. It's cash flow based, and there's efficiencies. And I told the seller, and I was very upfront, you're getting 8.6. I believe when he folds this into his platform, it's worth 13 to 15 to him. Okay? And I was upfront. I don't think I can get you 13 to 15, but he'll be able to get that because now his EBIT with his other stuff is at like 8 million, and it's this type of bell of the ball industry. So I feel that the auction process is real. I understand fully why Chris Hoffman doesn't want to participate. And once you own a deal, you will start to get that flywheel. But sometimes you got to pay just for that ticket to enter the room. And that ticket is maybe not as an attractive price business. Like you did a good job, but maybe it wasn't stellar, right? And that's good enough because it's hard to do even a good deal.
Well, that was a nice segue into competing with private equity. So it seems like private equity keeps getting lower and lower and lower. How can a searcher win? And if you can give a specific instance where you saw a searcher win, I think our audience would love it.
Okay, I did a post on Twitter this morning while I was on the treadmill before I sat with Ryan, like on the treadmill, because I'm crazy and I can't just like work out and be normal and just work out. I have to like listen to a podcast and post on Twitter while working out. And so I was posting about Joe Springsteen, who I sold a company to. He was what I would call a soda searcher, students over traditional age. And so he was, and Ryan and I were talking about this, being an older searcher gives you a ton of advantage because you have experience. And sellers kind of like it. I think they like it. They also like if you're young. So I've sold to 25-year-old searchers and I've sold to 58-year-old searchers. And he did this deal where he had a fully built out LinkedIn. He wrote the seller a letter with his LOI, and a competing LOI came in with a bank statement showing the full asking price for the deal in the bank. Like, I have cash, here's my bank statement with my LOI. But that guy was buying it for his kid. And my seller was like, well, my dad would have never bought me a business, right? And so that was a no for him because he felt the kid was in his 30s. The kid should have made the offer, okay? And so Joe Springsteen won this deal out of 5 offers, and he is just crushing it. He just got like another $800,000 contract with Disney, and it's just, he does facilities maintenance and huge pressure washing. His guys rappel. They have drone pressure washers. They have the trucks that go up 5 stories. Like, it's just amazing, and he's having more fun than ever. But it's all about being personal, and like the seller saw Joe was going to take care of the guys. He was going to offer them more money. He was going to put in benefits. He was going to train them. He was going to hire people. And this business is seen all around town, like the Hoffman trucks, right? It's one of those, it's called Mallard Systems. It's in Orlando, and people know this business. And that's what they were looking for.
Thank you. Lane?
Absolutely, searchers can beat private equity when there's a great cultural fit and they have the ability to perform on the transaction. I said yesterday that I would say try not to play in their sandbox, and that may be problematic for some, but I have a transaction right now. We'll probably trade it around $7 million. It's a towing company. There's a large PE roll-up group in that space, and they offered $2 million over where the searcher or financial offers from SBA-backed groups were. They're gonna take that deal, right? They want to be in that market, there's been a running joke about HVAC and residential services, and the prices that PE is willing to pay for those is very, very difficult for a searcher to compete with if they are really trying to work within a financial model, because the model that PE is playing with is a different model. So I would just, my advice would be find an area, choose an area where you're not going head to head with PE that's active in that space.
Gregory?
I have a 20-year-old daughter and has brought a few potential boyfriends home over the years. I always think of the Rodney Atkins song, Cleaning My Gun, when she introduces me to someone. But you only have one chance to make a first impression, and I think that is the secret power of a searcher or a high net worth individual who wants to buy a company for themselves versus private equity. So just most of the sellers are going to be baby boomers, retirement sales. 70% of our transactions involve that demographic. And treat yourself like you're meeting your future spouse or the person you want to date's parents. Go in with that type of attitude and work hard to make the best impression.
Wonderful. So we talked a little bit about this, but I'd like to dive a little bit deeper on the signals of credibility, like what really says this person's ready to buy more than anything. Now you talked about having documentation of they've got the ability to get the capital. What else is there that might be a good signal?
Yeah, I mean, to me, it's two pretty simple things. Can they perform financially? There was an announcement yesterday on this new fund that's going to help searchers be able to have pre-committed capital. I think that's a game changer, right? Because you have that cart and horse issue of the searcher. And I deal with independent sponsors as well who have done other deals, but they finance on a deal-by-deal basis, all things being equal. If I've got a committed capital over here and I've got an independent sponsor or a searcher, they're going to have to be really good to be able to compete with that. So, a visibility to capital and the relevant experience to be able to operate the business post-closing, because generally speaking, there's going to be some form of earnout or seller's note involved in the transaction. So you want to know that not only can they buy the business and perform at closing, but that they can operate the business.
I think I have one more question, but and then we'll do that. So, what about speed? Like, do you judge them by how quickly they get an IOI or an LOI to you, or does that really factor into it?
Well, sure. I mean, speed matters. I'm not trying to run a race to get the LOI, and I want to be deliberate. And as I said, it's a little bit of herding kittens because the way I run deals, I want to get multiple offers on the table, and you don't want to sit on an LOI. So there's that can be challenging to run that process. But speed to closing, I had a quality of earnings analysis that went on for 6 months. You're 6 months post LOI and you're still in you haven't even moved to legal due diligence. And that was a private equity firm. We ultimately just had to say, you're going to finish this. Well, we didn't say you're going to finish. We said, we're finished with this, right? So whatever you've done in your 6 months, you're done. And if you need to walk away from the deal, walk away, but we're not going to continue that process.
Wonderful. Let's go ahead and get questions from the audience. This has been great. Do we have somebody running mics by any chance, or can you speak loud?
I'll yell. How do you guys feel about buy-side brokers?
I will jump first on that one. Our sell-side representation focus, we want to bring all offers to our clients. So it is not something that would eliminate them from a deal in our world, but they have to be able to carry their weight in the transaction. They can't make the transaction more difficult.
Mike?
So in the instance where you give an example, seller accepted an offer for $4 guess, or do you just accept the loss that you could have gotten more of a commission?
It's not a loss, in my view. I work for the seller. If the offer is what the seller wants, I have completed what I've been hired to do. And I'm achievement motivated, as is my organization. So we want to just put wins on the board. Do you care whether you win by 3 touchdowns or 1 touchdown at the end of the day?
Yes.
So this is reference to Greg's comment earlier, holding everything else constant. We all like to do business with people we like, right? So with that said, how do we build rapport with you guys, brokers? Hold on. Or that doesn't matter. Just maximize the outcome, maximize your commission. Thank you.
Jackie, do you want to lead on that?
Sure. I mean, this kind of follows up with your question as well. My goal when I sell a company, and this is me personally, is future building, right? Like, I've been doing this 27 years. I get repeat buyers and sellers. It takes a long time, but I do get it, right? I'm not going to get it if I do like a shiesty deal, right? It has to be a win-win for the parties. And so with building relationships with brokers, it's the same thing. Like, you just start, but you start specifically. Hi, Jackie. Like, hi, my name's Henry. I'm looking at your steel erection business, and I really like it, and I think it could really fit within my skill set, and I see it's pending. Well, yes, Henry, it is pending. I don't have anything else. And you're like, well, I'm open to other things. That's how you get around the industry agnostic thing. Like, I'm open to unique deals, or I'm open to other things you might have. I'm looking geographically, and I really want to stay where I'm at. Like, that's how you build a relationship and say, I don't know if you're allowed for me to see that deal, but I'd still like to see it. Could I give you feedback on it? They might say yes or no, but it's at least worth asking. And then you start to get in, and then you can give feedback. You start building that relationship. Like, I have people, right? Just after yesterday, I told you guys I had 3 people cornering me, asking me for my off-market deals. And literally I get off the stage, and like, this guy, pretty amazing, comes and asks me for my off-market deals. I was like, are you kidding? Like, that was super ballsy. But, so again, like, I appreciated the aggressiveness, like, very much, but just little by little. But it was funny, and he was funny about it, and he was nice about it. And that's what you do, just little by little, just building. But ultimately with the commission thing, it is like community building, right? So like, there was an offer, and I'm sure, Lane, this is probably what happened in my imagination on your deal. Like, these guys, number 3 level price, were better, right? They're going to be better for the future, right? So people have to sleep at night, and some people don't, but some people do. And you get the best fit you can.
Let's see if there's questions on this side of the room. Anything? Okay, go ahead. In the stripe, go ahead.
Pia.
Yes. Can you talk a little bit more about relevant industry experience? A lot of folks are searching in areas they've not worked in previously, but presumably they have transferable skills from their prior experience. Can you talk a little bit more about what you look for there?
Pia, you would think that the banks are like this amorphous box sometimes that are not business people. They're not Heather Enderson. I wish they were. I wish Heather had her own money to give out, right? Because she is a better judge than a lot of the banks. But that being said, I have a trade school that is a makeup school, essentially, but it's a specialty makeup school, and they just denied the buyer for her experience. What is her experience? She has an esthetician and spa management background with spa education. Like, I can't find a better fit. I'm like, this is just making me crazy. And she's been to a number of banks, and I can't really help her at this point because she's just kind of, and so then I happened to be at this conference, and I sat down next to somebody else who will remain nameless, but like, we started talking, and like, this business kind of fits within his wheelhouse of what he already owns. But it's a real thing. This is why working with somebody like Heather is amazing, because she will shop the banks and knows who's a little bit softer on experience, but experience does matter. And rules went back in June 2030, 2025 to how things used to be, like pre-2016. That's the difference. It just went back to how it was. But you just have to like be creative in why your experience is relevant. And Pia, you're smart enough that you can like widget that together. Like, this is why I can run this company. You have to sell yourself to the bank.
Yes, go ahead.
Pia, I would also add, don't look at just yourself in the mirror. Look at friends, family, resources, because if you can come with the board of directors where you say, my uncle owns this same type of business in another city and he will be on my team. So you're right. I don't have it right here, but I've been familiar with this industry for 20 years. He's my favorite uncle, and he would do anything for me. He will come here and spend time because his business is dialed in, and if you need the financials to his business, he would be willing to share that as a reference point. So don't just look at yourself, expand your network.
That's a great point. Great point.
Okay, I think we have time for one more.
Yeah, hi. I have a question for Gregory. So, from a broker's perspective, how do you navigate the gap between what's being asked in the market or not being asked at all, and the actual realities on the ground?
So Lane quoted, I hear about 15-20% of businesses sell. I don't think any of us on the panel would accept that. I mean, my firm annually is 80 to 90% of our projects, and I can offline go into the 3 reasons they commonly don't sell. For example, losing a key customer before sale makes the sale a little more difficult. But we traditionally sell within 10% of where we went to market. Again, I believe that you should be able to price a business at any level, because you, with the support of your team, are going to be asked to do the exact same thing. And the private equity company is going to be asked to do the exact same thing. So a broker should, if they are an expert, be able to price a business. It's just my position.
Well, let's give a round of applause for our wonderful panelists.